Hello.
Okay, start.
Right?
Yes.
We would just check once again. There are others. See, I would begin with posing a question which we have often heard. Is tomato a vegetable or a fruit? The spontaneous answer that would come from everybody is that tomato is a vegetable. But there is a strong school of thought which believes that tomato is a fruit. And the theory is supported by strong principles. Similar is the topic for discussion for the day. We have generally perceived inflation to be a problem. But when a senior economist and a governor of Central Bank of Sri Lanka, Sri Nandalal Weerasinghe, advocates that inflation is a solution and not a problem, I think we should sharpen our ears to listen to him. The good thing about inflation, what we have heard is that when prices are expected to rise, consumer tends to spend more, which increases the economic activity. Over the next 1 hour or so, we would be hearing from the chief guest what he has to say on this matter. The chief guest for the day, Dr. P. Nandalal Weerasinghe, holds a PhD and a master's degree in economics, as well as a BSc degree. He has served in various capacities at the Central Bank of Sri Lanka, from being a chief economist and director of economic research, assistant governor, deputy governor, senior deputy governor, and is currently the 17th governor. Besides the above, he has represented his various financial and non-financial cabinet subcommittees on economic matters. He had also had a brief stint as alternate executive director of India, Sri Lanka, Bangladesh, and Bhutan at the International Monetary Fund. Speaker, sir, the program for the day is jointly hosted by the Cochin Chamber of Commerce and Industry, one of the oldest chamber in India, established in 1857, and Kerala Management Association, one of the pioneer management association of Kerala, set up exactly 100 years later in 1957. Sri Hari Kumar, President of the Cochin Chamber of Commerce and Industry, would offer the formal welcome address, after which the podium would be all yours, sir, for the next 45 minutes or so. This would be followed by a question and answer session for about 15-20 minutes, and we would conclude by a vote of thanks by President of the Kerala Management Association, Madam Sri L. Nirmala. Over to the President, Sri Hari Kumar, please.
Thank you, Mr. Veeramani. First of all, let me start this welcome address with an apology for the technical glitch, because it was not supposed to happen, but anyway, it happened. Mr. Nandalal Weerasinghe, Governor of Central Bank, President of KMA, Ms. Nirmala, past presidents and office bearers of both the organizations, invited guests, a warm welcome to all. This is a great day in the history of, as Mr. Veeramani said, 1857 born Cochin Chamber and 1957 born Kerala Management Association, when we are jointly hosting a talk by the Governor of Central Bank of Sri Lanka, Mr. Nandalal Weerasinghe, to talk to us on inflation, a solution and not a problem. Before I set the context of the meeting, let me say a word or two about both the organization. Cochin Chamber, as Mr. Veeramani said, is one of the oldest chamber of commerce in the country and has played a stellar role in shaping the policies of the government by making strategic interventions at the policy making stage. We conduct monthly talks on the perspectives of various economists on what is their vision of India forward, and these eminent economists who have addressed us include former cabinet minister like Mr. Jairam Ramesh, former finance minister of the country, Mr. Yashwant Sinha, former chairman of the planning commission, Mr. Montak Singh Ahluwalia, former finance secretary, Mr. Subhash Garg, the former RSS ideologue, Mr. S. Gurumurthy, and many others. We also had the noted economist, Mr. Madhav Gadgil, as the guest of honor for the Abdul Kalam Memorial Lecture. Now coming to our joint host, KMA, which is an active member of All India Management Association. It's not only one of the most active local management association of the state, probably even on a pan-India level, it has won many accolades in spreading management education and awareness. We are extremely proud to join hands with KMA for this lecture. Now coming to the topic of inflation, in the ongoing World Economic Forum in Davos, the first Deputy Managing Director, Geeta Gopinath, said that the whole world is troubled by inflation. Even inflation among the G7 has climbed to multi-decade highs, and in the US or UK, that means an alarming level. 8 or 9 is an alarming level as far as they are concerned. And India also witnessed inflation of around 6.3% in the Q1 of 2022. Everybody is in problem, will definitely give lot of relief to countries like Venezuela, which had an inflation rate of more than 2000%, despite being 8th largest country, 8th largest member of the OPEC, and 26th in waste in terms of oil production. Other countries which are following Zimbabwe include Sudan, Lebanon, Argentina, where the inflation is 54% before falling to 42%. What I was trying to point out is inflation is happening across the globe. And as the problem is affecting virtually every country in the world, maybe in varying level of differences, we thought we should get a luminary like the governor of Central Bank of India, Central Bank of Sri Lanka, to talk to us on his views of inflation, as Sri Lanka also is saddled with inflation spiraling around 40%. Sri Lanka also is facing some issues like shortage of food, fuel, and medicine, and rolling power blackouts, which has led to nationwide protests, as we read in the papers. Sri Lankan government had officially declared in 2021 that the country is facing the worst economic crisis in 73 years. Recently, we also read about Sri Lanka defaulting on a $5 billion US dollar debt. Asian Development Bank working paper in a research paper of 2019 state that Sri Lanka has a twin deficit economy, and twin deficit signals that a country's national expenditure exceeds its national income, and that its production of tradable goods and services is inadequate. That is, one is national expenditure is more than the national income, and the another is production of tradable goods and services is inadequate. What exactly could be the reason? We would like to hear from the Honorable Governor on this. Is it because the country is a nation of consumers? Is it because as a nation, Sri Lanka consumes more than it produces? Is it because of the various subsidies which like fuel, water, fertilizer, etc.? And is it a fact that subsidies make people lethargic to some extent? If that is so, there could be many other countries, especially among the democratic nations, who get a lot of subsidies before every election. And in every budget analysis, we also read that there is a trade-off between growth and inflation. So sometimes they say that some inflation is permitted provided it boosts the growth. In this background, when the world is reeling under inflation, we would now place before you Mr. Nandalal Weerasinghe. He has already been introduced by Mr. Veeramani. I don't want to get into the details. We would request Mr. Nandalal Weerasinghe to address us on inflation as a solution and not a problem. And before I hand over the stage to him, I also take this opportunity to welcome the sponsors, members of both the organization, and all the guests also. I would also request, in case people have any questions, that can be put in the chat box, and we will take it one by one, so that after the lecture, we'll be able to take it forward. And over to you, Honorable Governor. The stage is all yours.
Thank you for your kind introduction. And also, let me first of all thank the Cochin Chamber of Commerce and Industries for inviting me to this important event. I can see you are very proud of your history. I'm also privileged to be a speaker, and also I heard the list of very eminent speakers that you have invited earlier. So basically, I think I'm also privileged to be part of that. And let me get back into a question on the inflation. And obviously, as a central banker, so inflation is one of the important key kind of objective of any central bank around the world. Whether it is Central Bank of Sri Lanka, whether it's Reserve Bank of India, whether Fed Reserve, anywhere. So what you hear at the inaugural, at the earlier speech also mentioned the inflation problems that we see all over the world these days. And as a result, markets are very volatile and central banks are raising their interest rates. And as a result, the equity markets have been contracting, and the equity and debt markets are very, very volatile as a result of expectations of central bank measures to contain inflation, and as a result, there are expectations of raising interest rates to address the inflation situation. Let me first of all share my view on whether inflation is a problem or inflation solution. And first of all, my view as a central banker is obviously high inflation. Inflation to a certain extent, any country needs to have a certain amount of inflation. But that does not mean inflation that we are experiencing these days, to my view, is too excessive. For example, in my own country, Sri Lanka, right now, headline inflation is running around 30%. On top of that, there are a lot of other issues. Sri Lanka is experiencing what they call balance of payment crisis. And as a result, currency is depreciating at a very high rate. For last 2-3 months, Sri Lanka rupee depreciated by almost 50%. From about 200 rupees a dollar about 2 months ago, now 360 rupees a dollar. It's almost over 50% depreciation. Inflation is running us at 30% right now. That will be going up to 40% next couple of months. So that is not a good, it's a good situation. That kind of inflation, I would say, is not it's a problem, certainly. It's certainly a problem. If we had inflation around 4-5%, this is our central bank target to maintain inflation between 4% and 6%. That is our inflation target. So we need inflation, country like Sri Lanka, developing country like Sri Lanka, even country like India. At this stage of development, we need some little bit of inflation. Why I would say that around 4%, 5% inflation is good for the economic growth. Why I would say that? Basically, if you are industrial production, if you are producing something, if the inflation is going at a marginal stable rate about 4-5%, then obviously prices of your production also going up by on average 4-5%. This is an incentive for people to produce. So the problem is the deflation or low inflation, like we have seen in countries like Japan for long period. Deflation is bad. Deflation is worse than the high inflation actually. Why I would say that? If there's a deflation, which means people see prices of goods and services are coming down in the future. Going forward, if the prices of a kilo of potato, for example, if this year is 35 rupees, next year it could be 30 rupees. Deflation means prices are coming down. So that is not good for people who are producing potatoes. So that will not give any incentive for people to produce potatoes, because if they think prices are coming down. So this is the problem countries like Japan has been experiencing for a long period, since 1990s, the deflation environment. Then people tend to not to consume or not to invest, not to buy goods and services. If people think the prices of goods and services, those are declining or deflation going forward, they will postpone their decision on consumption and investment. That is bad for growth. So people need to consume and invest to generate economic growth that will improve welfare of a country, that will improve living standard of a country. So if there's a deflation, that certainly that will change expectations. People will stop, people will reduce their consumption and investment, that will reduce demand for the goods and services those are produced by those countries. And as a result, there's not incentive for them to produce. This is a situation, it's a deflation. That's why I think you need to have some kind of inflation. But I would say inflation, a bit of inflation. For example, advanced countries, inflation around 2% is a desirable level of inflation. When country, for example, advanced countries, when they have grown to a certain level, at a high level, then their countries can't go like India or China, 4, 5, 6, 7%. They are growing at 2, 3%. Then inflation around 2% is good. High inflation more than 2%. That is why if you look at the inflation targets by advanced countries like USA, like European countries in the UK, Australia, New Zealand, inflation target is 2%. Because they need at least inflation around 2%. If that goes around 4, 5, 6% like now, that is not good. That is why they are tightening monetary policy. They are trying to control the demand. They raise interest rates. There are a lot of volatility around across the markets, and those are going to have negative repercussions on the global economy and global markets everywhere. That is what we are experiencing now. When let me come back to the countries like ours, India, Sri Lanka, Nepal, Bhutan, all this at this level of development. For a country like Sri Lanka, India, we need inflation around 4 to 5% in my view. Compared to 2% inflation, there's a desirable rate of inflation countries like advanced countries. I would say that because countries like ours need to grow at a higher rate, like at least 5 to 6%, to improve living standards of people of these countries, because large number of people are living below poverty, and living standards are not as high as all these countries which have high GDP growth or high level of GDPs. As a result, we need to grow faster. For us to grow faster, around 6 to 7%, obviously we need inflation around 4 to 5%. That is why I say inflation is needed. But even for our countries, inflation is going well above those ranges. Say, double-digit inflation is not good for any country. That's my view. For example, even India or even for Sri Lanka, inflation is going above 10% means there's a kind of a macroeconomic imbalance in that country. If inflation is running around 10% on a persistent basis for a long period, which means there's some kind of a macroeconomic imbalance is there. This is why even for countries like Sri Lanka, India, now all countries, inflation is a threat right now, because those are well above the desirable level of inflation that we should have country like ours, well above 4 to 6%. In Sri Lankan case, our target for the central bank is to maintain inflation around 4 to 6%. But unfortunately, it has now gone up to 30%, as I mentioned earlier. It will go up to even 40%. Then I'll come back for the reasons when I come back to why Sri Lanka is experiencing this kind of imbalances right now, and some historical reasons. So I'll come back to that in a minute. Before that, I point that I want to emphasize the key question. That was basically the theme of this seminar. Whether inflation is a solution or the inflation is not a problem. Obviously, high inflation is a problem, but we need some kind of inflation. So that is basic the kind of a response to this broader question. But going forward, can you hear me? I saw someone muting on mute. All right. So going forward, inflation is a solution if inflation is too low. This is where even if you look at countries like Japan, in countries like United States, and some European countries before COVID, before the COVID, or after the global financial crisis, they have been trying to push inflation to the target level of 2%. That is where they have printed a lot of money. They have what they call quantitative easing. They maintain very low interest rates for a long period, like 0.25, 0%. Japan has been maintaining negative interest rates as policy rates. That is because they have been trying to increase inflation to a desirable level of 2% for long period. But now, as a result of those monetary policy measures, as a result of huge monetary expansion, as a result of large quantitative easing programs, as a result of maintaining very low policy interest rate by central banks around the world, especially in advanced countries, now inflation has gone up. And this is partly due to these monetary policy actions that have been taken by these global central banks, and partly due to this global supply side shortages as a result of this Russian-Ukraine war that has reduced the supply chain of major commodities that world economy needs to grow at a certain rate. So there's shortage in supply of petroleum, gas, and especially commodities like wheat, iron. Then there has been an increase in prices of those commodities, and food prices also gone up. As a result, now inflation also gone up. So there are two factors. One, partly the monetary expansion, the loose monetary policy that has been maintained by global central bank. One reason that inflation came closer to the target range of around 2% globally, and partly that it has gone even beyond their target inflation rates because of the supply side issues that we are experiencing right now because of the Russian-Ukraine war. So that's why that has spillover effects even to our part of the world, like in countries like India, Pakistan, Sri Lanka, because we are mainly net oil importing countries. So as a result of oil prices going historically high at highest levels, then as net oil importing countries, we have to import oil at a very high price. That is a major consumption item, and also major item that requires for industries, and major input that is required to have a certain level of economic growth. And cost of that input has gone up significantly. As a result of inflation has gone up. That is partly that reason. Now all of our countries are central banks, especially, are struggling to contain inflation from current high levels. That is why we are seeing Reserve Bank of India has raised interest rates marginally, but Central Bank of Sri Lanka raised soon after I took over the office in 8th of April this year. I raised central bank interest rates by 700 basis points, 7%, from 7% to 14%. All of a sudden, in one shot, I raised that interest rates. So that is a very tight multiple, but because our inflation was going around over 20%, that is not a tolerable level of inflation for Sri Lanka. Let me now come back to situation in Sri Lanka. Right now, as the earlier speaker highlighted, we are facing a worst economic crisis Sri Lanka has faced since independence in the last 74 years. The worst economic crisis we are now experiencing. Economic growth this year, even during the pandemic, economic growth was negative, about 3%. But this year, economic growth is going to be much more negative. It's going to be 5 to 6%. Economy is contracting. Inflation is lying at 30%. So economic growth is negative. inflation is at 30%. We don't have balance of payment or foreign exchange reserves to even to import essential items. Our levels of external reserves of the central bank is almost zero now. Liquid reserves are almost zero. So we are struggling to import essential items like petroleum, pharmaceuticals, gas, essential food items. We are struggling to find foreign exchange to import those essential items that we do not produce here. And as a result, there are large queues to buy petroleum, gas, all these things outside. As a result, the shortages has turned into a social unrest and also political unrest. As a result of people are unhappy because of the shortages that we are experiencing now, people have been protesting. And as a result, Prime Minister had to resign. The government had to be changed. Now we have a new Prime Minister. The President is still there. The President has a term of 6 years. But because of the protest, Prime Minister had to resign. About 2 weeks ago, the Prime Minister Mahinda Rajapaksa resigned. And we have a new Prime Minister who was early Prime Minister five times. Now 6th time, Mr. Ranil Wickremesinghe became the new Prime Minister about 2 weeks ago. And we have new cabinet of ministers and new government with the President Gotabaya Rajapaksa. There has been a political instability. There is a social unrest, social kind of issues also, and people are protesting on the road because of shortage of supply of essential items. Forget about non-essential, like we have banned import of motor vehicles, we have banned import of three-wheelers, we have banned import of motorcycles. Nothing can be imported because we don't have foreign exchange. For essential items, we are facing huge shortages. Let me just tell you why we have been the reasons, the legacy issues, why we are in this situation historically. As this earlier speaker mentioned, the key reason Sri Lanka has been experiencing this, right now we are facing this season, is for last 30, 40 years, Sri Lanka has been running what we call twin deficit, twin deficit, two deficits together at the same time. Those deficits are, one is what they call fiscal deficit. Government fiscal deficit means government expenditure minus government revenue. So if the revenue is lower than the expenditure of the government for a long period, which means government is running a fiscal deficit. In Sri Lanka situation, from 1977, this shows the year Sri Lanka liberalized its economy and opened up the economy to the rest of the world. Before 1977, we had a closed economy, like what India had before 1991. Sri Lanka had up to 1977. We actually liberalized and opened and moved to a market-oriented economy in 1977. That was a good move. As a result, economy started to grow at a higher rate, around over 5% for a long period. At the beginning, economy started to grow about 8-9%. Soon after opening up the economy to the rest of the world in 1977, like India did in 1991. That shows a structural paradigm shift of the Sri Lankan economy, that is 1977. Now, that was good in terms of growth, but that was bad in terms of fiscal policy. What basically happened after 1977 up until recent, all the governments, successive governments, they spend more than what they earn as tax revenue. For example, now if the government tax revenue is 20% of GDP, or government has been spending 30% of GDP as expenditure, then there's a deficit. That's what I call the fiscal deficit. So what is the other deficit? Other deficit is what they call current account deficit, the balance of payment. That is a country's deficit of foreign exchange. So what will happen normally, but this fiscal deficit leading to current account deficit. So this, when the government, when you look at the overall economy, government is about 20% of the economy, then private sector is about 80%. But the government is spending more than what they earn, and that generates a lot of demand for import of goods and services. Because government is spending more than what they spend. As a result, I please excuse me for a minute. I need to charge my iPad. Sorry, because I'm on the iPad. I need to plug in because battery is running low. Please give me a minute. Please excuse me about that. Sorry about that. I need to bring my charger and come back soon. Sorry. Yeah, fine. I'm sorry, but I'm back. So what I was explaining, I hope you can all can hear. So what I was basically talking about the current account deficit to balance of payment, which means country's foreign exchange earnings have been like the government for the whole country. We have been earning much less than in terms of foreign exchange than what we uh, spend as a country. That's what we call current account deficit. So current account in Sri Lanka from 1977 onwards, all the years we have been running high fiscal deficits. As a result, very high current account deficits, which means for us to survive, we had to borrow from external sources. We had to borrow heavily. Last 40 years, we have been living out of borrowing from external sources. Mainly at the beginning, when we were low-income country, we have been borrowing heavily from World Bank, ADB, by the government at very low interest rates. Because those are very low interest rates, very long-term loans, we were able to maintain that kind of borrowings, and still we did not have a kind of situation, debt situation, that we could not meet the debt service payments. But now, as a result of last very high commercial borrowings that government had to take, or for the country had to take, over a period of long period, and especially at the beginning, we had very low interest rate loan from World Bank and ADB, like those institutions. But later, Sri Lanka became a middle income country before any other country in the region. For example, in 2009, from a low income status, Sri Lanka became a low middle income because our per capita income went above 4,000. When you come to that status, then our concessional kind of external borrowings or concessional lending came down. The Sri Lanka had to go to external markets and borrow on commercial terms since 2007 onwards, which means Sri Lanka has been borrowing externally at commercial rates at higher rates than what we have been borrowing from ADB and World Bank like other institutions. As a result, our external debt burden was increasing on a steady basis since 2007 onwards up to now. So when it came to the pre-COVID situation, just before COVID, our debt to GDP ratio of the government went up to almost 100% of GDP. Compared to I think India, it's about only 60%. Like, and the whole country's external debt of whole countries was even much higher. Government external debts was about half of that, about 60% of GDP, and the whole country's external debt was about 70% of GDP because government has been a major borrower externally. As a result, just before the COVID, with the new government, government was changed and new president was appointed, elected in end of 2019. At that point, just before the COVID, we already had debt to GDP of the government went up to over 100% of GDP because our debt level was more than our GDP at that point. When it comes to that situation, and also major part of that external debt was commercial debt borrowed from international capital markets at a higher interest rates. The debt servicing became a major burden for the economy and for the government. For example, from 2019 onwards, every year 2021 up to 2025, we had to pay out of our debt stock. Every year, we had to pay at least $6 billion every year, which is very, very high, which is about almost 6-7% of GDP every year only for debt service payments. If you look at government revenue, in fact, government income or tax income was barely sufficient to meet the debt service payments. Then what the government had to do basically every year to repay debt, they had to take more debts every year. They had to borrow more to repay the debt going on. As a result, government was basically kind of trapped into what they call debt trap. And this was kind of a Ponzi scheme. Then in 2000, just after COVID, during the COVID situation, country economy was growing at a negative economic growth. As a result, the debt burden became very high. And also one other mistake the new government elected in 2019 did was that they reduced the government revenue, they cut all the taxes, large amount of taxes were reduced. As a result, government lost huge amount of tax revenue and expenditure remained at the same high level. The government had to borrow more. Then rating agencies downgraded Sri Lanka from BBB ratings to CCC. That is a junk kind of a default kind of a rate. Then our ability to borrow even to finance existing the fiscal deficits became impossible. As a result, we ran out all our foreign exchange reserves to meet the service payments of 2020 and 2021 during the COVID period. And at the beginning of 2022, we had run down all our reserves because we had to meet the service payments. Those are highly unsustainable. And we are not able to borrow anything from outside. So even to roll over or meet the service payment, Sri Lanka could not borrow anymore. As a result, this was also zero. This is where the problem came up in early 2022. There are shortages of essential imports. Even we didn't have even to import essential goods, import essential goods and services for day-to-day needs. Then now we are experiencing the situation. then we experience the balance of payment crisis. This is where the situation now. This is the background of why we came into this situation, as I explained briefly. And as a result, inflation, because of the shortages, because of the currency depreciation, price levels went up by 30%. Now next year it will go into 40%. People cannot afford, a lot of people, poor people can't afford to buy day-to-day things now at these prices. And government has no money to support them or give them some cash subsidies or even those things, because government has no revenue. No, tax revenue is very, very low, partly because tax rates were cut, partly because economy was contracting. This is, and also inflation. Let me give you a brief history of Sri Lankan inflation. As I said earlier, when a country is running a tin deficit, fiscal deficit and current account deficit, inflation is bound to remain high. In Sri Lanka's inflation history, since 1977 up to 2008-9, those 30, almost 30 years, inflation on average was 12%. Compared to Indian inflation was, I think, much lower, maybe 8-9%, but we had average inflation 12% up until 2009. But since then, central bank implemented what they call the inflation. Central bank implement the inflation control regime, monetary policy regime, framework, what they call inflation targeting framework. India also introduced this later, but we introduced first. With the inflation targeting framework by the central bank, from 2009 up to 2019 or 20, we were able to maintain inflation between 4 to 6%. That was, as I said, desirable rate of inflation for country like Sri Lanka. So we maintained inflation at that rate for almost 12 years under flexible inflation targeting regime as a monetary policy framework. But with the economic crisis, but with the balance of payment crisis, and also changing the ideology, central bank, the previous administration central bank abandoned the inflation targeting regime, moved back to what they call the modern monetary theory that was newly introduced by some academic, which said money printing is not a problem. That the belief or hypothesis of the modern monetary theory is that the central bank print money, that will not lead to inflation. There was a school of thought that came up, and our previous two governors basically was believing that, and as a result they started, because of the government was not having enough money, central bank started printing huge amount of rupees and funded the government deficits in 2020 and 2021, both in those 2 years. As a result of that excessive money printing, excessive monetary expansion by the central bank last 2 years, and abandoning the inflation targeted regime, inflation went up to 30%. Now it's going to go up 40%. So that is where soon after I took the office in April 2022, after my retirement as a deputy governor earlier. So now I'm trying to bring back what we call inflation targeting regime and introduce all the good monetary policy practices that we are we have developed in the past to control the inflation around a desirable level. And also we are doing a lot of other things. We are now working with the International Monetary Fund, and we have sought assistance from the International Monetary Fund for funding assistance with the fund program. So we are committed to address what they call twin deficit, fiscal deficit and current account deficit situation. And we are coming up with a structural reform program. We are coming up with a revenue tax package to mobilize more revenue by the government. And on that basis, we are in a negotiation with the International Monetary Fund for a financial assistance program. This is what India did in 1991 in a crisis situation. We are now going through this similar situation, and we are trying to seek assistance from the IMF. And also we have announced to our creditors, those who have lent money to Sri Lanka, because we don't have any reserves. We announced that we will not be able to meet your debt service obligations, and we would like to restructure our external debt. And we are seeking debt relief from our creditors, asking them to restructure their debt so that we can pay our external debt on a much relief basis. For example, as I said earlier, if we did not seek that relief, we had to pay $6 billion every year in next 5 years externally. What we are asking now from the creditors, please give us a haircut or reduce level of debt, or give us an extension for next 5 years for another 10 years. And instead of paying $6 billion a year, let's agree to pay only $3 billion a year and give us an extension to pay. Give us some relief in terms of what they call haircut. Give us some reduction in interest rates. So we are in that process now. We are negotiating with all the creditors, commercial creditors, Paris Club creditors, World Bank and ADB, and also the India and China. Those are all the creditors in Sri Lanka. We are seeking their assistance and seeking relief from those creditors for a debt relief program. That is the second part now we are doing. On the one hand, we are negotiating with the International Monetary Fund, seeking some financial assistance. And on the other hand, we are seeking debt relief from our creditors and asking more time to pay our debt. That is the second relief. But those two things, to be realized, it will take at least about 3 to 6 months. So now the challenge Sri Lanka is facing is that we don't have any money or any foreign exchange to import even essentials for next 3 to 6 months. So that's why we are seeing a lot of queues, a lot of shortages in all the essential items not available for general public in this country now. This is where I think India government of India has, and Reserve Bank of India has helped a lot in this regard. At least for short-term bridging financing, short-term Indian government and the Reserve Bank of India has provided us some relief in terms of short-term financing to meet at least essential items like petroleum, gas, food items, pharmaceuticals. They are giving some assistance. That's a great relief. Sri Lanka is living out of those assistance from India right now, but that is even not sufficient. We are trying to seek some more assistance, at least for up to next 3 to 6 months, for us to at least make available essential items for general public and for people in this country for their day-to-day survival. We are in a very, very difficult situation right now. So India is helping, and we are trying to get some more assistance from World Bank and ADB, at least to survive next 3-4 months until we reach an agreement with the IMF. After that, I'm very confident that we can turn around the economy. We'll implement all the necessary reforms to turn around the economy, to earn more foreign exchange into this country. But after about 6 months, and I am confident that we will be able to stabilize the economy in about 12 months period. But next 12 months, it's going to be a difficult period for Sri Lanka. We will have very high inflation, 30-40%. We will have shortages of essential items for general public. We'll continue to see social unrest in this country. There could be political instability. Government in administration will find it difficult to manage day-to-day affairs, and there are people will be asking changes. Then it will create political instability. And those are the challenges we are facing right now. So with those challenges and with the programs that I explained just now, I think I am as a government central bank, I am confident. If we move in that direction and if we implement all these programs that we have initiated now of last couple of months, we continue in that direction, we should be able to stabilize economy in around 6 to 12 months period. That is our expectation. And the central bank is working hard. Our Minister of Finance is now working hard, and we are seeing a lot of support coming from India, China, the G7 countries. Switzerland issued a statement saying that they are behind supporting Sri Lanka for the program with the IMF. And the United States has also expressed their support. And European countries and the UK, all these countries are now expressing some solidarity with Sri Lanka in this difficult situation. So we are hoping with the assistance from our partners, global partners, multilateral institutions and bilateral partners, we will be able to come out of this difficult situation now, next 6 to 12 months. But until then, it will be a difficult situation. So I think let me stop here. This is briefly the situation that we are experiencing. I'm very happy to have a much more conversation in terms of Q&A. That is where if you are interested in knowing about any other things, clarification, I'm happy to answer all the questions. Thank you very much.
Thank you, Honorable Governor, for taking us through the inflation scenario and what exactly contributed to this inflation and talking to us about the economic crisis in Sri Lanka. So now we have some questions in the chat box. One is from Mr. Kumaresh Mishra. He is an IAS of 1977 batch and he has served in the office of 3 former prime ministers of India. The question is, what kind of checks and balances can be introduced to ensure that this kind of situation doesn't recur, either in Sri Lanka or even other similarly placed economies? And does a legal limit to deficit, will it help? That's it.
Yeah, those are very good questions. I think I can understand that he has a good understanding of economics. Where the checks and balances, in fact, should come from the parliament, and that should be in the constitution. For example, now when a country is running fiscal deficit for almost 35 years, on average 8 to 9%, that's going to be unsustainable. That is the root cause of Sri Lankan macroeconomic imbalance. What we need actually now, what we call fiscal rules. In the new constitution, what we are proposing, and there's a consensus in the country, because now government is working towards new constitution. There's a consensus that there should be a chapter in the constitution that no one can change, binding constraint on the government about the fiscal deficit. For example, Indonesia has this rule. European Union has a fiscal rule that is they can't exceed the budget deficit more than 3%. Indonesia also has a fiscal rule in the constitution. I'm sure India also has certain element of fiscal management responsibility act, where if the government deficit is more than certain percentage, that would trigger certain actions by the parliament. So we had what they call Fiscal Management Responsibility Act, but that had no teeth. Every time the government exceeds the budget deficit that was announced by the earlier budget, only thing they had to go to finance minister will have to go to the parliament and explain the reasons, only explanations that did not trigger any actions or no checks and balances. As you quite rightly pointed out, now what we are proposing in the new constitution, if there is a violation or deviation beyond the sustainable level of fiscal deficit, then that should trigger automatic reduction in expenditure of the government, and that should be brought down to a sustainable level so that government can maintain this sustainability. That provision, checks and balances should be in the constitution in country like Sri Lanka, where there's a legacy issue of government running high fiscal deficits. As a result, central bank has been printing a lot of money, and other control check and balance that can brought in the central banking act that also we have proposed in the new reforms. Central bank should be banned to buy treasury bills to finance the government deficits. Right now, it is allowed by the central banking law, but we are going to introduce a new law. Yeah. On one hand, fiscal rules curtail government running high fiscal deficit by the constitution. Even if the small deficits, central bank should not be allowed to finance monetize fiscal deficit by central banking money. That is a second reform and balance check that we are going to introduce. With those two things, I think there will be a fiscal discipline and also monetary discipline that will address the twin deficit situation, both current account deficit and fiscal deficit going forward. I think that's a good question. Thank you for asking that.
Thank you, sir. Thank you for a very prompt reply. Now we have one more question from Mr. Adi Kesavan. He is the chief general manager of one of the largest banks in India, and he's basically asking about the twin deficit which you were also talking about. And his question is, if a nation's government debt is in the domestic currency and not in the foreign currency financed by domestic savings, will the position of twin deficit be more manageable?
Yes, and that's also a good question. That can be manageable if the country has a sufficient domestic savings. Then obviously that is what country like Japan, country like China, their domestic savings are, even some East Asian countries, domestic savings are much higher. So they can finance domestic government deficits out of domestic savings, because there are sufficient domestic savings or savings surplus. Savings are much higher than investment. In that situation, excess savings can be used to finance little higher fiscal deficits that will not create kind of the balance of payments stress or current account deficits. That is little bit for us, but in country like Sri Lanka, because we are having the unsustainable, persistent fiscal deficits, and government has not been saving any money. They have been a net, it's not a net saver, net spender. And country also, in terms of savings, our savings rate is, domestic savings rate is only about 16% of GDP. National savings is about only 22% of GDP compared to investment of 30%. There's a investment saving deficit in this country for long period. But some countries like in China, Japan, some countries, savings rate is about 45%. Investment rate is about 40%. There's a savings surplus. That is where they are lending for the countries. Then they can, this is why Japan can run high fiscal deficits, very high debt, because all are domestic debt. They have very high savings, domestic savings. So they can finance that without much issue. But we are in a different situation. We are in the other side. Their savings are lower, investments are high, expenses are high. As well, we have to attract foreign savings in terms of loans or borrowings that will create debt issues. That's what we are experiencing now. Thank you.
Thank you, sir. The next question is from Mr. T.S. Anantharaman. He is a leading chartered accountant, a former banker, chairman of one of the leading private sector banks, and as a serious investor. The question is, as the governor of the Central Bank of Sri Lanka, you also must have been watching the other neighboring economies. And in your opinion, does India run a similar risk or in meeting the international obligations in the background of war, in the background of the current international environment, high oil prices, etc.?
One advantage India is actually facing is that Indian total external debt of India compared with total external reserves Reserve Bank is having is much larger than the external debt stock. So that is a comfort factor for India, because if you look at Sri Lanka, as I mentioned, our external debt stock is about $50 billion. Level of reserves is zero. Whereas India external reserve stock is about, I think, probably, I can't remember, number is maybe $600 billion. External debt stock still much lower, which is to be paid over a long period of time. So India has sufficient foreign exchange reserves to meet the service payments of the whole country, including the government and the private sector. And one other thing, prudent thing Indian government did, unlike the Sri Lankan government, Indian government did not raise any commercial borrowings from international capital markets. All Indian government borrowings are mainly from concessional sources, like from World Bank, ADB, very long-term, low-interest loans. Those are not a very huge debt burden from the government point of view. Obviously, Sri Lanka, Indian private sector, corporates have borrowed a lot from commercial markets. But given the level of overall country's external reserves, I don't see it is an issue for India in the near future. And also India has a lot of foreign exchange income and remittances, IT exports. So India still can build up their reserve position. Going forward, they are in a very, very comfortable reserve position. This is one of the reasons why India has been able to help neighboring countries like Sri Lanka in this kind of situation, because they have sufficient amount of foreign exchange reserves.
Thank you, sir. Thank you for the compliment on India. And I think definitely that will give a lot of consolation to the serious investor in Mr. T.S. Anantharaman. And now another question from Mr. Jairam Nair is, with tourism in difficulties, which sector will be the next engine of growth?
Yeah, Sri Lanka, obviously, tourism has a lot of potential. Because if you look at Indian middle class, always would love to come to Sri Lanka as a tourist, because it's a beautiful island, and the kind of a living standards are much higher than a lot of parts of India. Obviously, Kerala is also equally good, and Sri Lanka is a beautiful country. If situation is normal, tourism is one of the low-hanging fruits. Sri Lanka can attract a lot of tourists, like Thailand, like Bali. It's a good tourist destination. Unfortunately, because of the current foreign exchange crisis and also due to COVID in the last 2 years, our tourism industry collapsed. But going forward, I think we have a good potential. And other industries, basically, if you look at Sri Lanka's geographical location, in terms of the port services, airport services, and because Sri Lanka is about 10 nautical miles, there are every day about 500, 600 ships going across closer to the Sri Lankan island, where the shipping services, port-related services, there's a huge potential of Sri Lanka to grow. It's like Singapore it's like for Southeast Asia, Singapore is a center for hub activities. Sri Lanka can be the center for that kind of activities for the growing South Asian subcontinent. India, Pakistan, Bangladesh, all these countries. Sri Lanka is a center, strategically located position, that very easy to do transshipment cargo, do all the logistics from Sri Lanka. It's a good position. That is where other area of growth. And also going forward, and we need to turn around. Sri Lanka has living beyond its means. Sri Lanka has been seen as an import-dependent country. We have to turn it around to export-oriented country. So small island like Sri Lanka, small open country, small open economy, cannot be a long-term basis import-dependent country. We have to be export-oriented country. That is where we can only sustain growth at high rate and can improve living standards. Whereas country like India do not necessarily to become export-oriented country. because it's a huge economy. There's a large domestic economy. But in our case, domestic economy is small. Anything what we produce, we should be able to produce to global markets. That's where we can develop country as a country, like a small country. That is where I think the future. That's where the areas like tourism, IT industries, because we have a good educated the youth force. Level of education, health are basically very high in this country, relatively higher than a lot of other countries in the region. And the level of educations are high. They are very educated population as a large percentage, and that is where the industry is not. We are not a cheap labor destination anymore. We can develop a high-end exports, high-end services, IT, tourism, BPO. All those are the potential areas that Sri Lanka can go going forward. Thank you.
Thank you, sir.
Sorry, I can take one more question because
Yeah, we'll take only one more question.
Yeah.
The last question. In fact, there are a lot of questions in the chat box. I would request everybody to excuse us because of the shortage of time and the initial technical glitch. We lost some valuable time, but I'll go to the last question. The question is from Mr. Mahadevan CR. He is from the SF Bank, is another banker. He is asking whether the policies, whether you feel the policies of excess money printing during the pandemic is one of the biggest factor in inflation spike, not only in the US, but also globally, especially in the emerging markets.
Yeah, that's again a good question. Obviously, in Sri Lankan case, excessive money printing during the pandemic is the main reason for very high inflation in Sri Lanka. Other countries, especially I think the US, the advanced economies, they have been also printing a lot of money to boost inflation over their target, as I mentioned, over 2%. That has worked and inflation has gone up. But one of the advantage of reserve currencies like US dollar, Japanese yen, euro, or sterling, when they print excessive money, that money wouldn't stay in those jurisdictions. Those are reserve currencies. Those are moving out of those jurisdictions, and it's going to have spillover effects to other emerging market countries. When the excessive printing of money by advanced countries are spilling over to emerging markets, that's going to create inflation pressures in the emerging markets. Yes. The advantage of reserve currencies printing too much money will not have a significant impact in their countries, in their jurisdiction, like we experience it, like in Sri Lanka. But that will have impact on other emerging markets in terms of high inflation, because those money flowing across borders and have spillover effects to emerging markets. But in case of country like Sri Lanka, where if you print too much rupees, that money wouldn't go anywhere. That will stay in this country because there is not a cross-border currency that no one will demand this currency, and it will create domestic inflation. That's why we are experiencing 30-40% because we have been printing excess money. Whereas the US printed so much of money, inflation is still 6% because that money printed by US Fed Reserve has been flowing all over the world. That is creating inflation somewhere else, like in the emerging markets. On top of that, this Ukraine-Russia war, as I mentioned, is one other reason, because of that is supply side shock. With the short supply in essential commodities, that also create inflation or tend to increase prices of those goods. This is partly why this high inflation globally. But certainly in countries like ours, high inflation is mainly because of the excess printing money. So thank you. Let me stop here. Thank you very much for the opportunity and very good questions that audience has. I'm sorry that I'm sure I saw a lot of questions being raised. I have no time to respond to all questions. Thank you very much.
Thank you, sir. We will just quickly wind up with a vote of thanks from our joint host, Kerala Management Association. The president of Kerala Management Association is here, Ms. Nirmala Lily. Over to you, Nirmala.
Thank you, sir. Thank you so much. Good evening, ladies and gentlemen. And this is my profound privilege to propose vote of thanks to the first joint program of KMA with Cochin Chamber of Commerce and Industry on the topic inflation a solution, not a problem. Dr. Nandalal explained to us inflation scenario and the current situation in Sri Lanka. Sri Lanka is supposedly facing its worst economic meltdown since its independence in 1948. And things are only looking to get worse, as Dr. Nandalal mentioned. Sri Lankan army, we have seen it deployed at every petrol station to help orderly distribute a fuel, while men and women wait long queues to buy petrol and kerosene, skyrocketing price of for the basic essential. Government do not have money. And then doctor also mentioned about inflation 30% going to 40%, rupee depreciation 50%. Everything it is Sri Lanka definitely alarming. And definitely, sir, tourism will come back soon. I'm also from hospitality industry, and there is, I think, nothing permanent except change. So situation will definitely change. We hope that under the leadership of a new Prime Minister, the situation will definitely improve at the earliest. And thank you, Dr. Nandalal Weerasinghe, for your detailed insight in the current situation in Sri Lanka. Thank you very much for coming and sharing the thoughts with us. Thank you, sir.
Thank you. Thank you.
I would like to thank President Mr. Hari Kumar K and Mr. PM Veeramani, Vice President, for this wonderful opportunity. I'm sure that we will have more functions and talks in future. And I would like to thank the sponsors, all members of Kochi Chamber of Commerce and members of Kerala Management Association, invited guests and Secretary Srijit S. Kumar. And big thank you to one and all. Thank you, and back to the President.
Thank you. Thank you very much, sir. Thanks for logging in. Thanks for accepting our invitation. And I wish a very, very speedy recovery of the Sri Lankan economy. Our wishes are with you, sir. Thank you very much.
Thank you. Thank you.
Nirmala, thank you very much. Thank you. Bye.